talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trust. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Register now at dav5k.boston.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning and welcome back to the Financial Exchange. Markets are moving up this morning on a better than expected inflation report. We'll be discussing why markets seem to be reacting to an inflation report that almost nobody pays attention to on a monthly basis. But a lot of it just, I think, has to do with a piece that we're going to cover later about volatility being a bit back in the game here in markets over the last really just few weeks compared to the last 18 months or so. Big news out of Chipotle and Starbucks as well as Home Depot. So a lot to cover here, but let's kick things off, Paul, with the, like I mentioned, perhaps least important inflation report, the Producer Price Index. First of all, I'm making perhaps too much light of it. It's not that it's entirely unimportant, but really this is an inflation report based on surveys of businesses rather than of consumers, meaning it doesn't directly impact what you and me pay when we when we go to the grocery store or buy a car or rent a home. It's a very different type of report. So nonetheless, what we saw out of this was a beat on expectations here. And like I mentioned, markets, at least initially, moving up on this data, looking for, I think, really anything to confirm that inflation is not going to rear its ugly head again, and will we or won't we have this recession that everybody's looking for?
Yeah, that seems to be the major takeaway, Mike. If you take a look at the VIX, which is a volatility index out there, what basically just gauges investors' fear or concern within the markets. We had been at a very low level of volatility for a significant period of time. Over the course of the last couple of weeks, like we've talked about, that has spiked up a bit. And it seems as if this market is looking for any report that it can try and parse through to determine or not whether or not we're going to a recession, what direction is the economy going. It just seems to be a really sensitive period of time for the economy and the stock market in general. So any news that we're going to get, it seems like will have some sort of impact on how markets behave. Tomorrow we'll have the CPI inflation report coming out, which is much more of a focus from the Federal Reserve and investors in general, but perhaps here seeing a little bit of a positive uptick due to the fact that this producer price index data that comes out can have a little bit of trickle down of impact into CPI because it is what producers are paying, and that is ultimately passed down to consumers. But I would agree with your overall sentiment. Largely, if you were to rank the economic reports in terms of their importance, it would be down at the bottom.
Pretty low.
Yeah.
Nonetheless, expectations were for a 0.2% monthly gain. Instead, you saw a 0.1% monthly increase on the measure of wholesale prices that the Bureau of Labor Statistics puts out on a month-to-month basis. We'll receive CPI tomorrow. That's the Consumer Price Index. This one has historically moved markets. I said to Chuck yesterday, like these reports always matter and they're always impactful. But to me, this July CPI report is probably I was trying to phrase it properly. And yesterday I said the least important one of the year so far. Maybe it's just the one that I'm least concerned about.
Most inconsequential.
It just seems... Where I'm wrong about that would obviously be if it beats to the upside, which I find very unlikely. But if it were to do so, then you do have everybody ringing the
Alarm bell.
stagflation alarm bell of, okay, we're heading for recession, but prices aren't cooling off like the Fed wants to. I think those would probably be overstated, but that could be the surprise there. So I'm not terribly concerned about the inflation report coming out tomorrow. And that probably sounds a bit weird to listeners because it's all that we have talked about the last few years. And if you ask Mark Vendetti, he has a bit of a differing view than I do on some of this, but rarely in history are you able to get inflation down on just a direct path towards 2%. Usually it's volatile. Usually it involves a lot of economic sacrifice, and we haven't seen a lot of those things yet. Maybe you could point towards a higher unemployment rate as some of that economic sacrifice, but it's been pretty mild in terms of the sacrifice part.
Oh, no, definitely it has been, because that uptick in unemployment is more a reflection of people being added to the labor market and less a result of significant layoffs or anything like that. And you're coming off 50-year lows. So you couple those two things together, that's not exactly economic pain at all.
So in the month of June, prices on the CPI level declined by 0.1%. Expectations for the July report are for 0.2% month-over-month increase. The year-over-year expectation is for 3%, which would be the same as it was last month. And then if you strip out the food and energy, actually you're expected to see the same exact result with a 0.2% month-over-month increase. So that will be coming out tomorrow morning at 8:30. I would argue has a little bit more of an impact on markets than this producer price index report. And then Thursday, some bigger data coming out. So every week we get the initial jobless claims. I've mentioned that I think this is probably the important data point of the year here, and we will be getting it every single week because that will be the first place that you see any sort of turn in the state of the labor market. These are the number of people that are filing for unemployment. And then at 8:30 on Thursday, you have the U.S. retail sales numbers coming out. Mm-hmm. So for quite frankly 2 or 3 years now, the American consumer has been the savior of the U.S. economy, and we've been talking at length about how companies like Delta and Disney and Southwest and Hilton and Airbnb are reporting a decline in demand for their products, for their services of vacationing and going to theme parks. And this has been a pretty common theme in this quarter of earnings. The question that I would ask would be, all right, is that getting replaced in some way by the stuff that everybody was buying in 2020 and now might be wearing down, right? You know, maybe your Weber grill is not performing quite the same way. Maybe your Solo stove is all rusted out and the treads on your Peloton treadmill that sometimes eats children are wearing down, and so you need to replace some of those items. We will see some of that stuff in that retail sales report. Obviously, there's also gasoline sales and all sorts of other items in there, but that comes out on Thursday of this week. Anything else kind of catching your eye? Obviously, Home Depot earnings came out. We'll be covering those a little bit later in the show, but anything else catching your eye about this producer price index, Paul?
No, it seems like Home Depot will dive into that perhaps maybe not a significant shift to services to some of those durable good items, but we'll get into that when we cover that. Other than that, to me, it at least isn't bad news, so certainly you'll take a positive report there, but really the focus lies in these reports that are coming up on Wednesday and Thursday of this week that I'm much more focused on.
As I mentioned, markets positively in the positive this morning. We've got the Dow up 95 points, or about 0.25%. The S&P up 44 points, or 0.8%. And then finally the Nasdaq up 240 points, or about 1.4%. We're going to take a quick break, and then when we come back, there was some breaking news this morning on leadership at Starbucks. We'll be covering that when we come back. Stay tuned.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
Recent reports suggest that a record 4.1 million Americans may retire this year alone. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're one of them, you'll want to have a retirement plan in place that focuses on several objectives. When to actually retire is a very important one to consider. Retiring early while giving you more time to enjoy life after work also means you'll need your money to last longer. Retiring later may not give you as much time to enjoy life's pleasures, but you'll have more time to save money. It's important for your retirement plan to strike strike a reasonable balance, and our new guide may help. It's called A Day in the Life of a Retiree, and it's yours free by calling 800-393-4001. The guide discusses these issues and more, so please call 800-393-4001. Once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are three of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud partner of the Disabled American Veterans, Department of Massachusetts. The DAV does incredible work, and it was one of the first organizations I became familiar with after my military service ended in 1984. As I built my company, Veterans Development Corporation, I did it knowing that I'd be giving back to fellow vets who need jobs, support services, medical supplies, and much more. I work with disabled veterans every day and is one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans, Department of Massachusetts, in this year's DAV 5K Boston. Please join me in supporting this tremendous cause by taking part in this year's event or by making a donation to the DAV.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Protecting your assets is your most important financial responsibility, and creating a trust is a great way to help. Cushing & Dolan are experts in elder law. Their brand new guide out this month is called Unlocking the Power of Irrevocable Medicaid Trusts. There are many types of trusts to consider, but irrevocable trusts can establish the kinds of safeguards you'll need to protect your assets long term. Learn about how the trust can protect your assets from probate and potentially eliminate your estate taxes. If you're closing in on retirement and have an existing trust that needs a second look, or if you need a new trust to ensure that your assets are secured, call Cushing & Dolan right now at 866-848-5699 and let them help you create a plan that gives you confidence in your financial future. That number again is 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Enjoy perfect weather, world-class dining, incredible beaches, and a vibrant nightlife. Head to visitusvi.com and book your trip today. No passport is needed and there's no money to exchange. Take your next vacation in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com to book your trip. That's visitusvi.com.
Well, it's 45 minutes into trading right now, and Starbucks is trading up by 23% this morning, up to $95 a share, whereas, not really competitor, but other restaurant quasi company Chipotle Mexican Grill trading down 13%, all on the news that CEO of Chipotle Brian Niccol will be taking over the helm of CEO at Starbucks, and the current CEO there, handpicked by Howard Schultz, will be exiting effective immediately. So this came out of not necessarily nowhere. Howard Schultz had been kind of criticizing the former CEO of Starbucks over the last several weeks, not really driving sales and traffic in the way that he was expecting. But very sudden, and both companies reacting, and no real news as of right now as to who's going to take the helm at Chipotle either.
To me, what makes this so noteworthy, Mike, is the stock movements that you're talking about here, where I can't recall in recent memory a CEO change like this sort of emitting such a huge response from the market in terms of, Starbucks rallying upwards of 20%. Certainly, you can understand that the shift in ideological practices or the track record that Brian Niccol has, which is pretty fantastic if you take a look at it, is reason for optimism. But to increase the company's value 20% right off the get-go from this change, to me, is impressive market movement. And then similarly, Chipotle, a company that's found itself really well positioned under Niccol's leadership, dropping by, what do we say, about 15% at the same point in time, just where it's positioned today. It's surprising, but to me, it's Disney and Starbucks have found themselves in an interesting spot where, granted, Iger is not a founder of Disney like Schultz is with Starbucks, but they have had such large presence over the company for many years, and the CEO transition has just been a cluster. It's been a disaster for both companies, particularly in Schultz's case. Having his figure sort of looming over the company has not really bared well in terms of the transition of leadership. Starbucks prior to today was down about 21% since the new CEO had taken over. So hopefully with Brian Niccol's expertise in this sort of, what do we want to call it, fast casual space, of foods, that he'll be able to bring some practices. He was previously the CEO of Yum Brands, which is behind Taco Bell and some other food chains. And then he's been with Chipotle since 2018 and really done a fantastic job. Chipotle was coming off the heels of a huge issue with the quality of their food. You had the outbreak of illnesses with their meats, and he really turned them into an absolute juggernaut. This stock has just absolutely roared over the last 5 or 6 years. They've increased sales. They've increased profitability. They have a really strong hold on the younger demographic. They've done a fantastic job. So I understand the optimism. I just wouldn't have told you that it would rally 23% on the news with the leadership change.
And in my mind, part of what made Chipotle and Brian Niccol so successful is really a modeling of that business after Starbucks. Right? Like Starbucks was the first. Think about first companies to roll out a online app ordering process. The first companies start pinging you in the afternoon for discounted drinks and all these things like that. That was the model that Chipotle really built themselves after, at least in terms of, not in terms of food quality or any of that stuff. They're very different companies from that perspective. But in terms of driving traffic, I feel as though Brian Niccol actually modeled Chipotle after some of the successes at Starbucks that have not been as successful as they were previously. I have to tell you, you hinted at this, Paul, but I find it quite concerning, the trend at Starbucks recently, and this doesn't really fix any of those concerns for me. So I want to talk a little bit more about Howard Schultz and his history with the company. So he ran that company, I think primarily, but on and off a little bit between different roles. Starting in 87 when he purchased it from its founders, right up through like 2017. He had a very heavy role in the company. In 2017, he resigned that CEO role and, kind of handpicked Kevin Johnson to run that company, which he did until 2022, at which point Schultz once again saw problems and took it over. He ran it for a little while before then appointing now CEO or former CEO Laxman Narasimhan.
I looked it up this morning before the show. Narasimhan.
And now, been heavily critical of him and what he did, which, again, you handpicked this guy. You certainly had a heavy role in appointing this person as the head of the company, and he's barely been in that job for a year. He started in April of 2023. Not a lot of time for a turnaround. So I recognize that Brian Niccol is going to be a different CEO. I would assume that he's going to be given a lot more power and flexibility than the previous CEOs were under Howard Schultz as kind of running of the board. But I don't know. To me, this speaks to leadership problems at Starbucks that are pretty significant if you're running through multiple CEOs in a period of, 7 years, most of which are being fired by the founder.
When you make a transition in leadership, you have to allow for the new to leadership to take over without the echoes of your presence in the background, where you have to allow to entrust them that they're going to take it over and they have to sort of go through their trials and tribulations. But if you breathe down their neck within such a short span of time, it undermines them, it questions their credibility, and as a result, it just doesn't lead to a successful business. I can't speak to how effective, the Laxman was as a CEO, but I don't think it helps having a larger-than-life presence like Schultz breathing down someone's neck that quickly into the transition, particularly when you're the one who picked him. And the same thing applies with Iger at Disney and his hiring of Bob Chapek, who was a Netflix executive to take over Disney. When you start questioning their decisions within a couple quarters, it just doesn't seem to really lead to a lot of belief that they are the right person for the job.
Now, perhaps this is the answer, right? Is you have appointed a couple people who were pretty beholden to Schultz and relied on him for being appointed to the role and really answered to him. And I don't know, frankly, Brian Niccol has enough of a resume and a kind of aura and excitement about him. We're seeing that in the stock price, that I don't know that Schultz will be able to do the same thing. By the way, Starbucks stock until today was down about 25% over the last 12 months. They are facing some challenges, right? I mean, which is kind of stunning to say for a company that makes a product that's physically addictive. It's a pretty big advantage. You're physically addictive and you don't have all the same taxes that cigarettes do on them because you're not as problematic for health as some of those. That's a pretty good advantage that you have in markets. I tend not to bet against products that are physically addictive like caffeine is. I tend to take a step back there, but look, they're facing more competition, especially overseas. They've got some serious challenges in China where they've tried to make a mass expansion. And quite honestly, Chipotle doesn't have those issues, right? Chipotle doesn't have a presence in China. They're not trying to negotiate with the Communist Party there about their next store opening. They're not trying to compete with a homegrown, Chinese burrito bowl. That would be surprising. That would be a bit surprising, I suppose, if that. But Luckin Coffee is the big company in Starbucks that's competed with them heavily, and frankly, everyone wants a piece of that pie. And like I pointed out before, a few years ago, frankly, not that long ago, 5-6 years ago, did either of you have any fast food type applications on your phones?
No.
I might have gotten Starbucks 4 or 5 years ago. Maybe that was the first one. But, these days, everyone's making that push. McDonald's wants you to download the app and offers huge discounts. Chipotle obviously wants you. Panera pushing big on the app. And so that space is much more concentrated. And I would imagine that what got Starbucks ahead of the pack a few years ago, the push notifications, the things that I've talked about when you're phone ordering, are not the same advantages that they have today, and they're gonna have to navigate that in a world where people are becoming more and more price conscious at this point in time in the economy. Let's take a quick break. When we come back, Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
Hi, guys.
We'll see you at practice this weekend. And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Saturday, November 9th at DCR's Castle Island in South Boston. Together, let's honor all who have sacrificed for our freedom. Register or donate now at dav5k.boston. That's dav5k.boston.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up, because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled A Day in the Life of a Retiree. Mike, one of the key focuses of this piece is about how to figure out how much income you actually need in retirement and where you start tapping assets from. How do you make those decisions?
Yeah, don't you hate the rules of thumb on this, right? Like, oh, I'm going to need 80% of what I had before. The answer is that there is no rule of thumb. There's no good one that you can use to figure out how much income you are going to need in retirement. Do you have a mortgage? What sort of travel are you planning to do? Yes, you won't be commuting as much. Maybe you and your spouse can go down to one car, but if all of a sudden your plan is to dramatically increase your travel budget, that changes everything.
And when you look at other things that can matter, it could be, where's your family located? Are you planning on moving somewhere else? Do you have grandkids that you want to spoil? These are all things that are going to play into that discussion of how much money you need to retire on.
Yeah, no doubt. And so it really does start right there with assessing your retirement ability. It's what type of income am I going to need in order to just be happy. It's not necessarily about maintaining lifestyle. It might be a different lifestyle once you're retired, but will I be content with it? And what sort of activities and lifestyle am I looking for once I am done with that 9 to 5, once I'm done putting in the hours for working and saving for my future?
Our guide this month is titled A Day in the Life of a Retiree. The way to request it is by calling 800-393-4001. Again, it's titled A Day in the Life of a Retiree, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are currently in positive territory as traders continue to digest this morning's PPI report that came in just below expectations. The Dow Jones is up 61 points, or 0.16%. The S&P 500 is up 37 points, or 0.7%. And the NASDAQ is up 214 points, or 1.28%. As we just talked about, shares of the coffee chain Starbucks is up 21% after the company replaced its chief executive with Chipotle's CEO Brian Niccol Chipotle shares are currently down 12%. Home Depot shares are up 0.75% after the home improvement retailer warned that sales would be weaker than anticipated in the second half of 2024. The company sees full-year comparable sales to fall by 3 to 4%. Earlier this year, Home Depot guided for a roughly 1% decline. U.S. traded shares of the Chinese streaming company Tencent Music Entertainment Group are down 16%. The company reported a 1.7% yearly decline in revenue. Monthly active users in the mobile categories also came in below analyst forecasts. And finally, taking a look at Hormel Foods, shares are up 1.2% after Citigroup upgraded the stock to buy from neutral. The firm cited improving retail sales trends and input cost environment, as well as potential upside to its margins in the turkey segment. I am Ben Kitchen, and that is Wall Street Watch.
Paul, market volatility is back, so watch out because your grandma's investment strategy is going to get swept out to sea. We have had a pretty remarkable lack of volatility through 2023 and most of 2024 until a couple of weeks ago. So I think it's worth acknowledging that. I also think all these articles that are being written about how crazy the volatility is and, watch out for this, watch out for that are probably overdoing it as well. But it is reasonable to acknowledge that the last 18 months was just kind of a slow and steady path upwards with very few interruptions. Really, since 2022, that has been the case. Most of 2023 and most of 2024 were like that. There's been a narrative shift now, right? To me, the story that consistently drove markets up for the previous 18 months was this concern about inflation, rebounding, and consistent data on inflation that turned in better than expectation.
Right.
So you just had this. It's not that there weren't any concerns, right? Like we had banks collapsing in April of 2023. We had a bout of higher inflation. We had interest rates surging. Like all of these things were real stories that did take place. The fact of the matter, though, was those concerns of what could be, what could happen, what normally previously did happen during other bouts of inflation just didn't materialize, right? We did not see inflation go from 3% to 9% back to 5% and then back up to 7%. We instead saw, CPI just had this persistent push downward, and that allowed for a lot of people that were hedging against the risk of a repeat of inflation to kind of wash away those concerns and see this persistent push forward without a recession, by the way. We definitively had no recession over the last 18 months.
Yeah, and you also had a Fed that was extremely accommodative, not in terms of what they did from a policy decision standpoint, because obviously they raised interest rates to a high that we hadn't seen in a significant period of time, but their messaging, Mike, they always were the backstop and seemed to be transmitting messages to the investment community to keep them optimistic. And I'll point to, in particular, in December of 2023, we had come off a very weak October in terms of the market. However, at that last part of the year in November and December, Jerome Powell came out and said that they may be looking at rate cuts heading into this year, 2024. Here we sit, 8 months into the year, perhaps on the precipice of our first rate cut, maybe second, but initially going into the year, traders had priced in 5, 6, 7 cuts, and the Fed had pointed to the fact that there may be 3, and we may get there when it's all said and done. But that really reinvigorated the market at the end of 2023 and led into a strong 2024. That combined with, inflation not beating to the upside, that kept markets in a very sort of stasis, and you had AI really sort of garner a lot of hope from the investment community, and that's why we saw the strong year that we've had over the last 16, 18 months in terms of the market.
So what's shifted now, at least, again, in my view, what's shifted over the last few weeks, obviously there was the carry trade story in Japan, where Japan's economy was effectively strengthening, the yen went up, the dollar went down on relative strength concerns, and so you had that spark a whole bout of volatility. But underlying all of this is now the concern about recession. It's that concern about recession, and should that recession materialize, we've talked about this, right? Stocks are pricey. You go take a look at price to earnings ratios. They are, I don't know, how do I describe it? Within spitting distance of very high levels that we've seen throughout history when you take a look at any metric to measure the price of the stock market and the S&P 500 in particular. So aside from just the general terribleness of recessions, why does that matter? Well, typically, you see price-to-earnings ratios decline during recessions because people are less optimistic about the future. They're not willing to spend quite as much on that stock and that future growth. And then also, the earnings themselves come down. So both of those things can impact that side of both sides of the equation when it comes to price-to-earnings ratios. So I think everyone now understands the fundamental underlying risk to this market. And I don't mean to minimize that. But what do you need to happen then for markets to not continue this bout of volatility, for markets to overcome this wall of worry, if you were? The economy just needs to not go into a recession. Mm-hmm. That's not a sure thing, right? Like, it's not written, it's not gospel that, when the Somme rule triggers forever, there will always be a recession. Everybody, myself included, is of more elevated concern about this now. But imagine, if you will, for a moment, imagine that 12 months from now, instead of a recession, we have an economy with under 4.5% unemployment, mm-hmm. under 3% inflation, and 30-year mortgage rates at 4.5% to 5%. That's a killer economy. Mm-hmm. I don't know that we will get there. I'm not trying to predict any of this stuff because for all I know, we could have 6% unemployment a year from now. We could have a really bad recession with a poor market performance. I merely point out that nobody really knows. Nobody knows how businesses are going to react. Nobody knows how consumers are going to react to the current climate. We get hints here and there, but we've had moments like this before where everybody's worried about something. Maybe it's higher inflation, maybe it's a rebound, maybe it's a recession. And over the last few years, the narrative has been, but then we sidestepped it and everything was all right. Mm-hmm. And those are the types of environments that allow for equities to, again, rally in the other direction and go forward. I want to be really cautious about this. I'm not projecting that. I'm not saying that's definitively where we end up. But I think a lot of people are sitting here. It's an election season. They're seeing unemployment climb. They're seeing, earnings from companies like Home Depot that are reporting that, frankly, people aren't shopping there quite as much. And I think they're shaking a little bit saying, what's next? What's the next shoe to drop? And that very well could come to pass. But the last few years have been the best evidence that I have seen in a long time that the rules of the past don't really apply forever in the future. Mm. When you screw with the economy as much as we have over the last few years, shut it down, reopen it, give everybody checks, float businesses, change interest rates faster than we ever have. The old rules of past economies don't necessarily apply, and you have to proceed with caution when assuming you know where the economy is going to go next.
It's a new game, bucko.
Let's take a quick break. When we come back, a little bit of Fed talk, and then we will be also getting into those Home Depot earnings next on the Financial Exchange.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud partner of the Disabled American Veterans, Department of Massachusetts. The DAV does incredible work, and it was one of the first organizations I became familiar with after my military service ended in 1984. As I built my company, Veterans Development Corporation, I did it knowing that I'd be giving back to fellow vets who need jobs, support services, medical supplies, and much more. I work with disabled veterans every day and is one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans, Department of Massachusetts, in this year's DAV 5K Boston. Please join me in supporting this tremendous cause by taking part in this year's event or by making a donation to the DAV.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Recent reports suggest that a record 4.1 million Americans may retire this year alone. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're one of them, you'll want to have a retirement plan in place that focuses on several objectives. When to actually retire is a very important one to consider. Retiring early while giving you more time to enjoy life after work also means you'll need your money to last longer. Retiring later may not give you as much time to enjoy life's pleasures, but you'll have more time to save money. It's important for your retirement plan to strike strike a reasonable balance, and our new guide may help. It's called A Day in the Life of a Retiree, and it's yours free by calling 800-393-4001. The guide discusses these issues and more, so please call 800-393-4001. Once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets is your most important financial responsibility, and creating a trust is a great way to help. Cushing & Dolan are experts in elder law. Their brand new guide out this month is called Unlocking the Power of Irrevocable Medicaid Trusts. There are many types of trust to consider, but irrevocable trusts can establish the kinds of safeguards you'll need to protect your assets long term. Learn about how the trust can protect your assets from probate and potentially eliminate your estate taxes. If you're closing in on retirement and have an existing trust that needs a second look, or if you need a new trust to ensure that your assets are secured, call Cushing & Dolan right now at 866-848-5699 and let them help you create a plan that gives you confidence in your financial future. That number again is 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Are you retired like me, and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
All right, Paul, we are still getting earnings coming in here, and one that I like to talk about every quarter when they report is Home Depot. It's always a pretty good gauge in terms of how people are feeling about housing and what they're doing to their own homes. And in pre-market trading, actually, Home Depot was negative. They have since turned positive, although not quite as strongly as the overall S&P 500, the overall stock market. So while the S&P's up now almost 1%, Home Depot's now up 0.6%, but it was down in pre-market trading. I saw as much as 1 to 2. Was it that much? Wow. Mm-hmm. So what did we hear from Home Depot in terms of the most recent quarter?
Basically, what Home Depot has been reiterating is that they're not seeing this type of sales growth that they would expect. They're seeing a decrease in comparable sales between 3 to 4% versus what they had initially estimated was going to be a 1% decline for sales. And the feedback that they're getting from the CFO is basically a lot of customers are deferring these larger purchases and renovations and opting to do more of these smaller projects where they may be doing a bathroom remodel, or they may be, purchasing paint for smaller projects around the house, but less so this focus of, renovating a whole wing of the house. And what's interesting is the parallels to my situation are very similar. We had we have a screened-in porch. We had looked at making it 4 seasons ahead of the summer and the spring at some point. And then I got a quote or two and I just said, you know what, screw it. It's not worth spending this much money on it. But Mike, if interest rates were sitting at a HELOC on 3 or 4%, back where we were in the COVID times, I probably would have kicked around saying, hey, let's do it. It's relatively cheap money, and then I'll pay it off over time. Without that option in place, knowing that if I were to open up a HELOC, I'd be looking at 7 or 8%, it's easier to just say, we painted a bathroom and did a little bit on the vanity. Those types of things, we're making that decision as a household, and it seems like a lot of other Americans are doing the same as well because of borrowing costs.
They describe it as a deferral mindset,
right.
And I think that, I don't know, this earnings report, sometimes you get an earnings report and you just have to put it to the side saying, it doesn't really line up with my narrative of what the economy looked like, or maybe you need to change your narrative of what the economy looks like. And Home Depot doesn't tell you everything about the state of the overall U.S. economy, but it can confirm thinking on what's been going on. And the housing market itself has seemed to be stuck in a bit of, let's call it paralysis. You've seen inventories tick up. You have not seen sales tick up. You've seen homes staying on the market for longer, but by and large, you're not seeing prices come down. And that speaks to that deferral mindset in my mind. You've got sellers that maybe are motivated, but not motivated enough to cut the prices dramatically. You've got buyers who are not seeing the price decline substantial enough to actually come into this market and accept a 6.5% to 7% mortgage rate and go close on that home. And the same thing seems to be happening with Home Depot sales, right? If you are that next potential buyer and you are sitting on the sideline saying, we've got a 2-bed condo, we've got a second kid on the way, we want that 3rd bedroom single family home. No, of course you're not going to do a big renovation to your 2-bedroom condo right now. Why would you? You're not sure that it's going to pay off. You're going to defer that. And I think that's a lot of what we are seeing right now, especially with those higher interest rates. And I think also, too, probably people have lived through periods of time where, these prices for a screened-in Porsche seem a little bit outrageous. I wonder if the economy weakens a little bit, if maybe I can get it done for a little bit cheaper.
And borrow the money cheaper, because that's going to go hand in hand.
Right.
Rates are going to come down if the economy slows down, and there's going to be less construction activity, so maybe I can reach back out and get a better deal.
The perfect example of this, I was speaking with somebody who previously kind of sat on the board for his church, and they had done a big fundraise. This was in the mid-2000s for, a series of projects that they wanted to do. Quotes were coming in a little bit high, so they deferred a bunch of stuff, and then the Great Recession hit, and he was like, we got, those couple of years, we had all this savings from donations for this one project we were going to do, but we got new pews, we got new air conditioning, we redid the entrance to the church, we did this, that, the other. It's like, suddenly there's a lot of people bidding for our work, and it became a lot more affordable, and I think that's some of what you are seeing right now. Not that that would be good for Home Depot. That would be bad for Home Depot, but that is playing into the psychology of potential home spenders right now. I think.
They've seen 7 straight quarters of declines in same-store sales, so it's been slow.
Summer in New England is spectacular, but winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are 3 of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you'll need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Well, Paul, it's time for our almost daily segment of 2 different stories that have vastly different opinions about what the Federal Reserve should be doing and should be doing next. The first is an opinion piece in Bloomberg from Marcus Ashworth, who's a columnist. Second is one from John Authors. And the first one is an argument for why the Federal Reserve needs to depart from their hard stance on inflation at 2%. Goes on to point out that their upcoming symposium is kind of titled on that subject of departing from that 2% target, whereas John Authors in Bloomberg makes the argument that inflation still matters more than anything else, and that 2% target seems really important to him. So I don't know, where do we where do we go with this? Like, I think we've been heavily critical of the Federal Reserve, especially in the early stages of COVID. And maybe not the very early stages. That's when they responded really rapidly to ease conditions. But when it was fairly obvious to most that inflation was on its way up, they were late to the game. Okay, they had to eat crow. We're done with that stage. Whatever it does to the impact of the Fed, it's past. I have a much more difficult time criticizing anything that the Fed has done over the last 6 months. Frankly, the last 18 months.
I would agree. Slow to act, but the idea of needing to cut sooner or anything that they've done in general, it's hard to really knock it. I would say if Mark Vendetti was here, he would probably argue that they've been a little too pandering to the equity markets. I think that's a relatively fair criticism. I would actually add one criticism of December of 23, implying that there were going to be a significant amount of rate cuts heading into 24, particularly with the first quarter showing perhaps a return of inflation. That was ill-timed, and there was no reason to really make that
They didn't
point.
need to hang the mission accomplished banner.
Exactly. But other than that, this idea, these two pieces here, these opinion ones, I really don't know where to start in terms of kind of tearing these apart, just because on one piece, they're arguing that they shouldn't be so data dependent, the Fed, that we should allow for their expertise to make decisions and consider other factors. But what other factors? And to me, it just seems like other economic reports is what they should consider. And they do that. Don't think that they sit back and look at 3 reports to make a decision. And that's what this opinion piece, to me, at least read, is that they are heavily dependent on data, and the argument being made that if inflation rears its head again in a recent report, that would cause things to change. But
yeah, I tend to agree with you. If they were wholly data dependent to every single report, that would be a different story. But they've been pretty clear that they're willing to depart from some of those data points and treat them as just a bump in the road. Let's take a quick break, but a lot more to cover in the second hour of the Financial Exchange. We'll be right back.
Despite overwhelming support from Democrats and Republicans, time is running out for Congress to pass the AM Radio for Every Vehicle Act, which will keep AM radio in cars. Text AM to 52886 and ask Congress to bring this bill to a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are 3 of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free, because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
If you're getting close to retirement, you've likely thought about how you'll spend all of your free time. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and with no more 40-hour work weeks or hour-long commutes on your agenda, you might find yourself on the links in Florida or traveling the world with your spouse and family. The financial pieces of the retirement puzzle are important. Having a specific plan about how you want to live day-to-day in your post-professional life is just as important, and our new guide called A Day in the Life of a Retiree may help. You can get it today by calling 800-393-4001. In the guide, we're going to discuss how to connect your financial needs in retirement to where and how you'll be living. Call us again at 800-393-4001 and get your free copy today. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Welcome back to the Financial Exchange. At 11:06 today, we've got the Dow up 184 points, or about 0.5%. The S&P now crossing that 1% to the upside threshold, up 57 points. And the NASDAQ up 285 points, 1.7%. The Russell 2000 up 13 points, or 0.6%. The yield in the 10-year Treasury falling a bit to 3.854%, likely on that weaker than anticipated producer price index, meaning prices lower than anticipated. And oil prices also down about 1.4% on demand issues, which are clearly overshadowing any of those Iran-Israel tensions. We've got Home Depot stock, which reported earnings today, up a little bit in trading in spite of a worse than anticipated reading. Now down a little bit less than 0.1%, was up earlier in trading. And then Starbucks up big today on the news that current Chipotle CEO Brian Niccol will be taking over the helm at Starbucks, and the current CEO ousted effective immediately. Chipotle stock, by the way, down pretty substantially in early trading. Anything else catching your eyes this morning, Paul, in terms of big stories moving markets?
No, I don't think so. I think we've hit on them. It comes down to reports that we'll get on Wednesday and Thursday that I'm really focused on.
So piece this morning in Wall Street Journal from the editorial board on deficits, and it makes an interesting case here, and in my mind, a fairly compelling case of what could be a solid campaign strategy of criticizing Democrats and Kamala Harris. We seem to be whistling. The title of the article is "Whistling Past a $1.9 trillion federal deficit," and goes to lay out the case for, under President Biden, we substantially increased the federal debt. I don't think that's a secret. Kamala Harris, running for president now, doesn't seem to have any concerns about continuing that trend, and continues to talk about fulfilling some of the campaign promises of the Biden administration that weren't able to be completed, and lays out a case for, hey, this might resonate with voters were it brought up. Democrats want to focus on fixing the Build Back Better promise, affordable health care, affordable child care, paid family leave. And I think we can have honest debates about the importance of those items, but nobody seems to be asking how much will all this cost, and basically laying out that, hey, this could be an effective campaign strategy for the Trump campaign, and that's where I would disagree. That's where I would set aside and say that I don't really think, based on what Trump did when he was in office, combined with what he has talked about on the campaign trail, like the closest thing to economic policy that I've seen from President Trump so far has been lower taxes and don't tax tips. You'd have to do a pretty big about face at this point to say that I'm focused on the deficit and, responsible fiscal policy right now.
Yeah, that's why it can't be a strategy, because neither political party in this instance has any proposition or any idea of a policy that would cut down the deficit. Both want to come in, Democrat or Republican, and spend more money. And to us who do follow this for a living on a daily basis, what frustrates me more is just the deficit that we have and that it's not being talked about, which this article does cover. But making a strategic point that either Republican or Democrat can run on fiscal conservatism and getting the deficit in order, there has been no evidence to support that. Dating back to Trump's time in office, where the deficit went up, Biden, to be clear, the deficit under him went up as well. We're at this huge impasse where the amount of receipts that we're taking in as a country versus what we spend, there's a large gap there of $1.9 trillion, as we referenced. And it doesn't seem like any political party has any type of suggestions to bring that down. No one's going to run on increasing taxes. I get that, because that's not going to get you any votes. But it should be at least discussed, and there should be some sort of proposal in place. But good luck touching Social Security, Medicare, defense. Those three areas, it's going to be hard to cut.
I get why this is challenging. The whole piece that was written here seems to be a case for why Donald Trump should be running on this. And I honestly think, to put words in his mouth, I think that he could have, right? Like, if he had come out and made the economy a compelling piece of his campaign pledge, he could have said, look, yes, the deficit expanded dramatically. By my account, about 40% the deficit expanded under Donald Trump under his 4 years in office. But look, we were in the very early stages of a pandemic, and we shut down the economy. And I know that there's debate about whether or not that should have happened, but it was 2020. We didn't know a lot of stuff, and so that was the solution that was presented. And those early spending programs were important to keep the economy afloat. I think he has a compelling argument with that.
Mm-hmm.
Instead, and then from there you can say, but were I in charge, I wouldn't have continued those checks through 2022. I wouldn't have allowed for as much unemployment to be paid out. All of these things that were then passed, the Inflation Reduction Act, these other bills that were put into place. Quote, I wouldn't have approved those, and I wouldn't have pushed for further tax cuts. Instead, what you've had Trump come out and say is, I want to cut taxes. I has not a single time that I have seen talked about Social Security or Medicare funding and how those programs are going to go belly up in 8 years, and wants to cut taxes on tips rather than saying, hey, this is where we're going to rein in spending. We're going to control spending here. We're going to reform this, redo that. Maybe I'm just crazy. Like, maybe I'm the only person that actually cares about this subject, and that might be what's driving this. Like, I don't know that people actually care about deficits anymore.
No, you're not crazy, but the political parties cater to the extremes on either side of their political party, whether it be Democrat or Republican, and it's a lot sexier to say, here's all the things that we're going to do and here's all the spending we're going to do, rather than the pragmatic approach of, hey, at some point this is going to become a much bigger issue for this country if it's not resolved.
Yeah, that seems to be the piece, and I get that that's challenging because no one out there has any sort of idea and answer as to when the deficit will become a problem.
Mm-hmm.
That's a tough thing to run on, right? Like, yes, it's a problem. It's going to be a problem someday. It's almost like climate change as an idea out there. Like, we know it's going to be a problem someday. It's a really problem. We should change our way of doing things, but we don't know what's going to be the result and how it's going to play out. And that's kind of how the deficit works. Like, at some point, you can see how it could become a problem. It might not be a slow bleed. Like, it could be a very sudden thing where all of a sudden a number of countries say, you know what, this U.S. economy is a disaster, and they just keep borrowing and borrowing and spending without any real plan to pay us back over the long term and anything other than deflated dollars. So that could come on suddenly.
Or it could take more than 4 years, and then who cares?
Right.
Because you're in office and you're out.
That could be the other result of all this. So I don't know. To me, at least, I feel as though Donald Trump could have had a compelling campaign piece on government spending, inflation, tying all of these things to the Biden-Harris group. And I have to agree with the op-ed here piece from the Wall Street Journal. They've failed to do so in any meaningful way. Still have about 90 days here before election time. And maybe like I said, maybe I'm wrong. Maybe this is not what people care about, and that's why we're not talking about it. But that's another problem that, again, if people don't care about it, then that's probably an even bigger problem in terms of the long-term future. So let's leave it there for now. When we come back, going to have some trivia for you. That's next on the Financial Exchange.
Tune in for Trivia, brought to you by Applebee's. Every day at 11:20 for your chance to win cool prizes. Text us at 617-362-1385 and use keyword Applebee's. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Saturday, November 9th at DCR's Castle Island in South Boston. Together, let's honor all who have sacrificed for our freedom. Register or donate now at dav5k.boston. That's dav5k.boston.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are three of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free, because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Recent reports suggest that a record 4.1 million Americans may retire this year alone. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're one of them, you'll want to have a retirement plan in place that focuses on several objectives. When to actually retire is a very important one to consider. Retiring early while giving you more time to enjoy life after work also means you'll need your money to last longer. Retiring later may not give you as much time to enjoy life's pleasures, but you'll have more time to save money. It's important for your retirement plan to strike a reasonable balance, and our new guide may help. It's called A Day in the Life of a Retiree, and it's yours free by calling 800-393-4001. The guide discusses these issues and more, so please call 800-393-4001. Once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Despite overwhelming support from Democrats and Republicans, time is running out for Congress to pass the AM Radio for Every Vehicle Act, which will keep AM radio in cars. Text AM to 52886 and ask Congress to bring this bill to a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
It happens all over Massachusetts.
Can you tie my shoes?
In every home, and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Trivia is brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in beer cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials. You get a free appetizer just for signing up. Now that's eating good in the neighborhood, void where prohibited dine-in only. The 1980s was the MTV decade. MTV used to be a television station that played music videos. It was launched on August 1st, 1981 at 12:01 a.m. The first video on the station was a 2-year-old song by the British band The Buggles. Today's question is, what was the first music video aired on MTV? What was the first music video aired on MTV? Be the first person to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text. We'll give away the Applebee's gift card on Friday's show. That's 617-362-1385, and the first correct response will be our winner. See the complete contest rules at financialexchangeshow.com.
Paul and Ben, I want to have it on the record here that on August 13th, we found the first story in several years about actually affordable housing that is out there. So, this is exciting news.
Which country are we talking about?
Very local.
The United States.
What?
Cape Cod and islands. Yeah, I know. There's a piece in the Journal today about real estate on Nantucket and Cape Cod and Outer Banks, and a few properties that are, in fact, quite affordable, mainly because they will soon no longer exist, would be my guess. But they outline the case of a David Moot, who, like many of us, assumed he'd never be able to afford a beachfront home on the Massachusetts coast, because most of us can't afford that. But he just picked up a home on Cape Cod listed at a surprisingly low $395,000 in Eastham, Massachusetts. Eastham or Eastham? Eastham, thank you. Don't spend any time on the Cape. My apologies. And so what happened here? Well, the property is 25 feet from an eroding sand bluff that is expected. I love this. It's expected to erode at about 3 feet a year. So does not leave him a lot of time in this property, but, quote, life's too short, and I just said to myself, let's just see what happens, said Moot, who's 59 years old. It's going to eventually fall into the ocean, and it may or may not be in my lifetime. I love just the
gamble.
The gamble, right? Like, we'll see here, $395,000 for the last 15 years, that might be worth it for me otherwise. But here's the problem with this whole strategy, aside from
the house going to in the ocean.
Yeah, aside from the house going into the ocean and you not having a home anymore, right. Which we know that problem. I'm sure he couldn't get a mortgage. I'm guessing.
To be clear, this is a second home for him too.
Yeah,
he lives in Pittsburgh.
He can probably afford it. He probably can't get homeowners insurance. He probably can't get a mortgage. Okay, let's start there. But David, if this home actually does sweep into the ocean, who's going to clean it up? Like, that's a pretty big issue for me. Like, if you're home and all of the, the propane tank that's there and the deck all gets swept out to sea, I'm guessing it's not you that has to clean it up. And so in some places they've been condemning properties that have fallen, there's one property where the deck fell into the ocean and the town condemned the property. And I don't necessarily think that you have to go that route unless the property can't be sold. But the solution in my mind would be, okay, what's going to be the cost to clean this thing up if a hurricane does roll around and literally sweeps this home out to sea? Make them post a bond to the town, right? Like the town's going to have to go pay for the cleanup of this damn thing when it does, in fact, sweep into the ocean, which will happen. So, yeah, post a bond. It's going to be $50,000. If you go and sell the property later, you can have the bond payment back. But anybody who owns a property like this that is very likely to be swept out to the sea, just, go buy a bond from the insurance company that's going to pay out in the event that your home does sweep out to sea, and you can own it. Otherwise, condemn the thing, tear it down, and be done with this ridiculous policy. Think about the emergency services who have to deal with people like this, who, decide to own a home feet away from the ocean and, have to evacuate when a hurricane comes, or have to be rescued by a helicopter when their entire community is underwater. This is just preposterous ways of dealing with a problem. This home shouldn't exist. I'm sorry to David. I hope you enjoy it. I hope it doesn't get swept out to sea. But it's ridiculous. This is absolutely crazy.
The seller had to get something.
Again, just remind you, if you are a taxpayer in Eastham, I don't really care. You should be the one that's pissed off, because what's going to happen? This home is going to get swept out to sea at some point, or it's going to get condemned, and then the taxpayers of Eastham are going to have to pay for the demolition or cleanup of this home that eventually gets ruined. Or it's going to be a FEMA disaster, and all of us, meaning the entire United States, will pay for it through disaster relief funds. That's the eventual outcome of this single property, whether it's 5 years from now or 25 years from now. If that's what we want to deal with, and that I guess that's been the status quo. So if that's how we want to handle it, then I guess fine. But it sure seems like it would be cheaper for the National Park Service to just go buy this property, knock the thing down, and not have to deal with this nonsense anymore.
Well, Moot was debating converting it into a space where terminally ill people could sit and enjoy the ocean for their last days. I guess you're against that?
Great. Yeah, that'll be easy to evacuate in a hurricane.
Anyone who lives there is going to be terminal. Let's be honest.
Give me a break. The same thing is happening. This is not just a Massachusetts story, by the way. Outer Banks National Park Service has been buying up properties and just leveling them because they recognize the cost to insure and then rescue these people when a hurricane comes around, or clean up all of the debris that gets swept out to sea and interferes with fishermen and cargo vessels. It's an actual problem that we have to worry about here. So. Yeah, I could go on for days about how we subsidize people living in coastal communities, because if you're not aware, the entire flood insurance program in the United States only exists because the federal government backstops it.
Right.
Private insurance companies will not write flood insurance. The prices that they would have to pay are so ridiculously, ludicrously high that nobody would buy it. So they basically said, we're not going to enter this market unless the federal government backstops you. And that's what we have done. That's the route that we have chosen for properties in the United States. So this was an interesting one to me. Another place where you can get cheap real estate is San Francisco. They still cannot get businesses to return to downtown San Francisco. So in kind of a gimmick, they are offering some tenants free rent for a limited period of time to come on back and build back up the downtown area of San Francisco, since very few of the businesses have actually returned to the area.
It's interesting. I was on the beach a couple weekends ago and ran into a couple who live in the area. They're in Palo Alto, but had worked a lot in San Francisco and lived there previously. And we're just talking about the area. And of course, I'm tiptoeing around the fact that they've grown up around there. I don't want to be too negative about it, but I said, I've heard it's kind of going through a tough time. They turn to me, they say, everything you've heard, Paul, it's accurate, and
really?
It's probably worse.
Because I've heard other people say, no, it's overly exaggerated. It's actually a pretty nice area still.
I tiptoed around there, like,
blunt,
what you've heard, yeah, that's the deal in terms of the homelessness, the drug abuse in the area. He's like, they have made strides to clean some of that up. There is a focus on getting the area into a little bit of a better place. Of course, it varies by what area you're in, but I did find that interesting that typically with the national media, we do a lot of time focusing on negativity, and so I thought maybe it was being overdone, but they're like very quickly.
No, it's pretty rough.
They cut me off really quick. Like, yeah, what you've heard, it's real.
So it's the Vacant to Vibrant program, a program initiated last year by the city's mayor to fill empty space downtown. Who knows if this will be successful? I mean, you obviously can afford a business if you don't have to pay rent, but if those customers don't eventually return, and then your rent payments start back up, well, then it's not going to work. So, hopefully it'll become a bit of a self-fulfilling prophecy here where those businesses do return, then the customers return. Quick break, but a lot more to cover, including the trivia winner.
Straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide out this month titled A Day in the Life of a Retiree. The big focus of this guide is about figuring out what you actually want to do with your time in retirement, not just the financial piece, but how are you going to spend your days? How does someone go about figuring that out, Mike, or starting to figure it out?
Yeah, Chuck, I love this piece because it is a lot different than our normal course of what we put together from the Armstrong Advisory Group. And what I tell people frequently, one, I'm not going to tell you how to spend your retirement. I have no idea. But the most successful retirees, and by successful, I mean the most content in retirement, who are not stressed about money, are those who have really thought through a coherent plan of not just what I don't want to do in retirement, i.e. work, but what I want to accomplish and do when I'm done working.
It seems to me that it really has to be something where you say, I'm retiring to do this, not retiring from doing that more than anything else.
And often that's the focus because, look, for a lot of us, work is extremely stressful. We've been supporting families for decades, and the allure of not having to do that, not having to pull in that paycheck anymore is really tempting. But I'm here to say that I've looked at a lot of this from a lot of different people in all sorts of different industries, And the most successful ones are the ones that are retiring because they're passionate about something that they want to do that they finally have time for.
Our guide is titled A Day in the Life of a Retiree, and you can request it by calling 800-393-4001. Again, the guide is A Day in the Life of a Retiree, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
Today's trivia question is, what was the first music video aired on MTV? That's right, his Video Killed the Radio Star by the Buggles. It is notable as being the first ever played on MTV. It's also notable that on February 27, 2000, it became the 1 millionth video to be broadcast on MTV. Today's winner is Kevin in Ansonia, Connecticut. He'll be taking home the Financial Exchange Show t-shirt, and he's also registered to win a $100 gift card to Applebee's. We'll be giving away the gift card on Friday's show. Trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. and join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood. Void where prohibited. Dine in only.
Not that I would consider any of us radio stars, but I share the concern when you guys talked about live streaming this show over the internet with video. And in fact, every time we talk about that, this exact song comes to mind. A bit of a face for radio, if you know what I mean. But nonetheless, we've managed to survive thus far. I'm standing on 3 phone books, so that helps too. But Gen X retirement plans look shaky. Is the American dream still alive? So what are we talking about here? Well, those Gen X members ages 44 to 59 are responding to surveys saying that they feel vastly unprepared for retirement. About 55% of Gen Xers don't expect to be financially prepared for retirement. That compares with 48% of boomers, 46% of millennials. That's according to a national survey from 2023. And I don't have this survey going back a few years, but here's what I'm going to say about this. I bet that boomers responded the exact same way in their 40s and 50s.
You just look at the breakdown of these percentages, Mike, and it's pretty easy to compartmentalize each of them. 46% of millennials not worried about it, or 40% are concerned. The further away you are from it, the easier it is to be less concerned about it. You and I, or I'll speak for myself, I'm not worried about retirement today because I have young kids and the focus is on providing for them, and retirement can wait. I mean, certainly you plan for it and you do things to take
your
action. Your
focus right now, make money, don't die.
Right. And make sure your kids are healthy. That's the primary focus, but the boomers, it's easy for them to have a lesser percentage because, hey, they're in it, and perhaps they've been in it for 5 or 10 years.
They've been forced to do the plan.
They're sailing along, so at least they have less of concern because they know what it feels like. And then, of course, you have the ones who are on the precipice of it where it is uncomfortable because it's uncertainty and they don't know what it's going to look like. So the results, I'm sure, are in line, and I guarantee you, Mike, to your point, that boomers had the same fear approaching retirement. We will probably have the same fear as well, even with all the planning that we do. There will be uncertainty if you haven't done, enough legwork to it.
I'll also say, if I'm going to take an objective look at things here for a moment, I would argue that younger baby boomers, let's call it the youngest half of the baby boomers, probably had a tougher time with retirement and planning for that type of thing than the Gen Xers did. You think about Gen Xers, at least they all had access to a 401k plan, right? 401ks were created in 78. The oldest, so that's nearly 50 years ago, the oldest Gen Xers are 59 years old. So for most of their working career, there was at least access to a 401k plan. Yeah, the Roth 401k, Roth IRA didn't exist yet, but they had access to the tool. For boomers, those younger boomers, they didn't have a pension in most cases, or if they did, then the company might have gone through trouble in 2008 and canceled it. They 401k started to exist, but not until part of the way through their working career. And so I would look at that young baby boomer group. Like if you're an older baby boomer, you have a higher likelihood of having a pension, so you might be in a different spot. But those younger baby boomers, I think, had a really tough deal. They were buying homes also in like the late 70s or early 80s when it was a really challenging environment to buy a home, kind of like today. Millennials, the good news for millennials, like, plenty to complain about. I recognize, like, I came of age during the Great Recession. That was when I entered the labor force, was right after the worst recession since the Great Depression. So you had a rough starting point, but the tools that are out there, far better than where they were for baby boomers and Gen Xers, right? Like, how many people were auto-enrolled in a 401k with automatic matching contributions, with an investment lineup that you didn't have to choose, and a plan that automatically increases your contributions. Like, again, you might have had a crap job right out of college because, there were PhDs delivering pizzas for a few years. But with the tools that are in place now in the auto-enrollment, there's some pretty decent tools there. Of course, Social Security could be wiped out by the time the millennials get there. But my main point about this would be, I don't think this is unique to Gen Xers. I don't think it's unique to millennials or baby boomers. I think everyone, when they are in their 40s and mid-50s, starts to think about retirement and feels vastly unprepared for it or underprepared for it. A vast majority of us, I think, fall into that category at some point because when you're in your 30s, you're too busy with life. You might have kids. You're trying to climb the corporate ladder. You're still in that young accumulation phase, and it's just all you can do to focus on raising your family. When you're in your 60s, you've probably already been forced into figuring out what you're going to do in retirement. It's when you're in that mid 40s, 50s range where you're starting to, your kids are getting older. They're finally, well, from what I understand, don't want to hang out with you anymore, which is probably pretty sad, but you have more time on your hands to think about these things. And so I think it's natural to start to get concerned about where you're going to be in retirement. The only solution to this problem, by the way, save more, I guess, is the obvious solution. Sure. But the only real solution to, I think, get rid of the consternation and get rid of the stress of retirement is to actually do the planning.
Right.
And that's the heavy lift. That's the problem, is that the reason you probably feel unprepared for retirement is because you have no idea how much money you need for retirement.
Sure.
You don't know what that magic number is that you need to achieve in order to get there and actually live comfortably in retirement. And so, of course, you feel stressed about it. I have this bucket of money. I have all this debt. How am I going to get here? What's the path forward for me? That is what the Armstrong Advisory Group tries to do with their clients day in and day out. We work with you to understand your budget, your plan, sit across the table from you, and learn what your goals are so that we can build a financial and investment plan that encompasses and surrounds those goals, and then pivot when you need to. We're an registered investment advisor. That means we are a fiduciary. We charge an investment advisory fee that puts us, a lot of people like to say, on the same side of the table there in terms of how we get compensated. And we work with our clients day in and day out to solve these exact types of problems and concerns about whether or not we will feel comfortable for retirement. And that can be when you're in your 30s and still in the family planning stage. That can be when you're in your 60s and 70s, when you're already retired and not feeling comfortable, or anywhere in between. If you'd like to sit down with one of our advisors from the Armstrong Advisory Group and understand your plan better, the phone number is 800-393-4001. We have offices located throughout New England, but if you're not local, we also do Zoom meetings, phone calls, just to get you introduced to the process here. And once again, that phone number to book your free consultation is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Paul, Ben, I don't know if you knew this about me, but we have in our house a tiny little black and white cat named Pepper. She's She's not very nice. But we love her.
Most cats aren't.
Yeah, kind of swats at people, and when the kids get too close, runs away. But nonetheless, she's a important part of our family. And according to the Boston Globe, I've got bad news because private equity is coming for my cat. What are we talking about here?
What we're talking about here is private equity has made a huge push into the pet space where the price for veterinary services have soared 65% over the last 10 years. And as a result, private equity has perked their ears up and has really made a huge investment into the space, buying up all sorts of veterinary practices and making them profitable as can be, and reducing the quality of care for the prices they're charging for pet owners. So it's been a huge area of concern. I will say, Mike, as an advisor who gets inbound calls from clients for withdrawals from time to time, pet withdrawals can be a frequent source of a need to take money out of your portfolio because the insurance coverage is either not there or not as strong as it would be on the health insurance side. And some of these surgeries are really expensive.
I have to come out and say, though, private equity is attracted to this industry because it's a high profit margin, unregulated industry where they know they can make money because people are attached to their pets and willing to spend on them. Private equity isn't coming into this industry because they think it's unfair. And by the way, the prices that you are seeing are not because of a lack of competition, right? When I worry about private equity coming in, it's because they can corner the market. There's no competition, and they'll be able to raise prices without pushback. It's clearly not the case. Private equity only backs 30% of veterinary offices in the United States. There is not a competition problem. To me, yes, is private equity causing veterinary offices to probably charge for things they didn't previously and drive a higher profit margin at these businesses? Of course, that's what they do. And by the way, somebody that wants to make a dent in this can go to veterinary school, open up their own veterinarian, and make a decent living, not taking private equity money and undercutting their competition and going to market on price for veterinary services. That's how free markets work. The reason that everything's more expensive today is because we are more and more willing to spend thousands of dollars on keeping our pets alive compared to even when I was a kid.
Right.
Did anybody do exploratory surgeries on dogs when you were 7 years old? Not in my town. Like, that wasn't a thing that I recall happening. It was like, well, Cooper's going to a farm upstate, and I'm sorry. The amount of money that we all spend on our pets, it's changed. And I'm even talking when I was a kid. Like, go talk to somebody who had a pet in the 1960s, and it's unrecognizable. So medical advancements have occurred. Prices have gone up for healthcare everywhere, right? Like, go take a look at Medicare spending. It's the same thing. This stuff has gotten more expensive because we're better at keeping living things alive for longer. The difference is we pay for them differently. Health insurance is almost a requirement today and absorbed by a larger population. Pet insurance is not. So that's the answer to me.
But don't worry, Elizabeth Warren wrote a stern letter.
She did. She wrote some private equity folks a strongly worded letter saying that she does not like how costly pet care has gotten, and so
she's definitely a cat lady.
Don't worry, that's going.
Just speculating.
I don't need protesters sitting outside our office, Paul. All right, I'm a cat man, so let's back it off here. But yeah, I'm sure that's going to solve the problem. So expect that your pet care costs are going to come down dramatically in the next few months here. Let's take a quick break. When we come back, Stack Roulette on the Financial Exchange.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network. Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are 3 of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I joined the Marine Corps when I was 18 and served proudly from 1981 to 1984. As CEO of Veterans Development Corporation, my goal is to give back to the veteran community, many of whom are employees of this company. This is one of the reasons I am so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K Boston. The DAV works tirelessly to support many of our disabled veterans and provide them access to critical services that help them live comfortably every day. I hope to be part of many more success stories of our vets being able to achieve their goals and dreams when their service ends.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Every single day, more than 2,000 U.S. companies face a cyber threat or attack. The Boston Red Sox in Fenway Park chose Centripetal as their official cyber network security partner to ensure the protection of their network and ballpark. Intelligence is the answer to protecting your network, and Centripetal is the global leader of intelligence-powered cybersecurity. The choice is yours. Are you going to be another one of those attacked companies? Or are you ready to experience a radical new cybersecurity solution? Find out why the Red Sox chose Centripetal at www.centripetal.ai.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit dav5k.boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The Financial Exchange has built an incredible partnership with the Disabled American Veterans Department of Massachusetts. We can't wait to take part in this year's DAV 5K set for Saturday, November 9th at Fort Independence on Castle Island, and registration is now open. You can help our great American heroes by walking, running, or simply making a donation. Your gifts will support services such as the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Learn more at dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
I'm trying to confirm that this is actually current news, but it appears to be. Paul, you still drive a Jeep?
Yes.
Okay. Ben, what did you drive here today?
Ford Explorer.
Okay. Well, you might want to take a look at the Ford. Ford and Mazda have issued do not drive warnings covering more than 457,000 vehicles that contain the recalled Takata airbags. Didn't know those were still in issue, but that was the one that basically was exploding and spraying shrapnel throughout the vehicle from a few years ago, if you recall that good story. Ford's warning covers 374,290 models, years 2004 through 2012, comprising a range of models that were part of previous recall campaigns. It also includes Lincoln and Mercury vehicles. Mazda's warning covers 82,893 previously recalled models, 2003 to 2015 vehicles. NHTSA, National Highway Traffic Safety Administration, is urging owners of the vehicles to not drive them until a repair is completed. And to date, NHTSA says 27 people in the United States have been killed by the defective Takata airbags that exploded, while at least 400 people in the U.S. were injured by them. So I don't really have any commentary on this other than public service announcement. Get your car.
What model
can I get a ride home, guys?
What model are you working with? Past 2012?
No, I'm newer than that.
There you go. Nice. All right, we don't have to drive Ben home to Central Massachusetts today.
Macy's will set off a wave of changes at malls as it's going to be closing 150 of its stores across the country by early 2027. As many of us know, the square footage that Macy's has at malls can range from anywhere from 200,000 to 225,000 square feet, leaving a lot of open space there. And really what the theme has been, and this could change very quickly, has been more experiential visits at these malls where there's much more of a focus on putting in things like hockey rinks, apartments, warehouses. Now, those are different realms of, commercial real estate, but it's really been a huge shift from what most of us grew up with the huge mall that had the footprint behind a Macy's or Filene's or some of these other department stores, and much more of a focus now on this idea of drawing people in, whether it be through restaurants and other things. That is going to be a huge changeover as Macy's has just undergone a huge strategic shift over the last 5 or 10 years, where they were really behind on e-commerce and their online presence, and now they're sitting on all this space and they got to unload it at some point.
So you guys been to the Natick Mall, I assume. Both of you
Yes.
grew up in this area, so you've frequented that large mall. So the JCPenney anchor that was there years ago in 2015 turned over the space to Wegmans, which built a grocery store there. And then this year or last year, Wegmans said, this ain't working for us. They ditched the space. They closed that store. It was a weird setup. It was 2 floors. You had to put your shopping cart on a weird escalator and go up and down.
It was also on the wrong side of the mall. It wasn't Route 9 facing, so people didn't realize it was there.
Yeah, it didn't really work. Do you know what they replaced it with?
No.
Pickleball courts.
Oh.
So
that's not annoying at all.
I honestly think, if you're going to have the annoying sound that all the Wellesley residents are going to complain about, at least then you can keep it contained within the 4 walls of a shopping mall with the automatic doors. So like when they open up, you'll hear that. But when they're closed, I'd imagine it's pretty easy. I think skating rinks could make sense. They've already got all the electricity built out there and the cooling systems to be able to put in a hockey rink. So I think a hockey rink could make sense.
There's some personal bias.
Well, yeah, I just want more and more hockey rinks everywhere across New England. So
As
that
someone
ice
who
gets
can't
cheaper.
skate, I could give two what's about it.
Well, then you can go for the pickleball, and I'll go for
something for everyone.
Yeah, I'll go for the skating rink.
Pickleball on ice.
Ooh, now we're talking. Now we're cooking with gas.
Now you can really get the broken hips increased.
Markets remain in positive territory as we close out today's edition of the Financial Exchange. Dow up 226 points, closing in on 0.6%. S&P up 61 points, a little over 1.1%. The NASDAQ leading the way, 309 points, 1.85%. We'll be back at it tomorrow for a CPI Wednesday. Have a great rest of your day, everybody.